Good evening, I'm John Batchelor. This is the John Batchelor Show. The fresh report from the planet Pluto is a mystery, and I will speak later in the program of what we know so far about the confounding facts from first photographs from New Horizon. We're talking about mountains as big as the Rocky Mountains made out of puzzle water ice. We're talking about a surface that looks new, remade, perhaps as recently as 100 million years ago. No craters. We're talking about a surface that cannot be explained. It's not like anything else in our solar system. So we will speak of Pluto, but now let's go to the real mystery in the solar system, and that's the planet Earth. Gordon Chang of Forbes.com contributor is here with me. Planet Earth, and we could, zooming at 10,000 feet, settle on any particular pasture on planet Earth, and there would be mysteries to solve. Tonight we're going to settle not on Iran. We're going to come to that later in just a moment. I'll talk to John Bolton about that. But we're going to come to China. There is a mystery from China. It's a fresh one. It can be solved in time. The mystery is, with the apparent contraction in exports, the apparent fall off of imports in China, importing raw materials such as from Australia. All of that points to a slowdown, a recession, a dip in the expected growth, in the great expectations of China the miracle. However, then the GDP comes in at 7%. 7% growth with all these negatives. Gordon, can I say right now that the emperor is well clothed if you listen to Beijing, but the rest of us are puzzling about his wardrobe? Good evening to you.
Well, good evening, John. And I'm not puzzled, because even in a depression, China would be reporting 7% growth. This is just made up. The 7% that they released a couple days ago is actually essentially... yes, it's a puzzle. It's a puzzle,
yes,
John.
We're
it makes
being diplomatic.
No sense.
Remember, understate everything now. We understate everything. I'm disappointed that I can't solve this. Okay, so we're going to go to Singapore right now. Fraser, Howie, our colleague, author of Red Capitalism. Fraser, a very good morning to you. Gordon and I are officially puzzled. Yes, at 7% growth with all these disappointing numbers these last months and years, the exports, the imports, all of that. We also see a disappointment in Singapore. Is all of Asia, all of the trading partners of China, is this the shin bone, the knee bone, the collarbone, all connected? Good morning to you, Fraser.
Good evening to you, gentlemen. Sure, they're certainly all connected, of course, and China is the largest trading partner with most of these economies. So China has been a huge engine of growth, and of course there is a lot of economic activity in China regardless, but as Gordon says, and you've said yourself, John, everything is very weak, and the idea that 7% growth of the high-level GDP numbers, I don't know quite what it's supposed to do, because it's not telling you anything of what I would say about the genuine level of economic activity in the economy. And it's certainly, if you were running a business, if you were looking to expand into China or try and make sensible business decisions, strategic decisions about what you want to do, then that number isn't helping you at all. Whether it's made up or whether it's just measuring something else, I don't know, but it's not telling you about what it's like on the ground.
Yeah, Fraser, the National Bureau of Statistics reported 7.0% growth for the first quarter. And after that, everyone has acknowledged that there has been a deterioration in the economy, which is noticeable and marked. How could they actually say that they had 7% growth for the second quarter when everyone knows that just is almost an impossibility? It just seems to me that they're making numbers up and they don't really care what we think or not. They're just going to do that because that's what they do in Beijing.
Well, I always look at it this way. I think to the Communist Party and to many, there is simply no concept of truth. They're not interested in providing somehow the true number. What they're doing is, truth to the Chinese Communist Party is a convenient story which is acceptable at that time. You just need to read the party's own propaganda, that one year something is allowable and the next year it's not, then it is, then it's not. That they're happy to flip and flop on their interpretation of events, on how they view things all the time. And in the same way, I think they're doing a service. I genuinely think they think they're doing a service. They're saying, well, we're taking the volatility out of these numbers. It wouldn't be good for the economy if you saw saw sharp falls and then jumps and have the volatility numbers. We're soothing them out, so don't be too worried. But it's nonsensical. It's not giving you meaningful information, and if you don't have meaningful information, how can you make informed decisions? And that goes for the policymakers themselves.
Yeah, it seems to me that this must be related to the plunge in the stock market because, over the last several weeks, we've seen extraordinary intervention in the markets by the government, doing a number of things, not only stopping new initial public offerings, not only heavy government buying, but actually the prohibition on selling that we've seen. And of course, all of these investigations into malicious selling. It seems to me that they did not want to have a truthful number because they were worried about confidence, and they felt that if there was a lack of confidence, it would affect the markets. It's just a theory, but what do you think?
Well, look, I think certainly, well, let me put it this way. What I think the real story of the stock market has been, and it's not been, although there's been tremendous index moves and volatility, to me that's not the story. The story of this past 2 weeks in the stock market is this collapse in confidence of the government, and the government in a panic over, frankly, a relatively minor issue. No institution went under. There was no threat to the banking system or the financial system or even to the integrity of the stock market. Things were working. And yet you had this panic measure for reasons which still aren't entirely clear to me, to try and rush out there and try and support the index level at particular levels and try and boost the index back up to those levels. And you think, this makes no sense. And you saw a government clearly in panic who was coming out day by day with new measures, as you say, restricting people from selling. That hits at the fundamental private property rights. No one's going to buy stuff if you don't think you can sell it. That's why it's in the stock market. That's why it's listed. So have they massaged the figures again upwards to try and give a bit of confidence? Perhaps. But frankly, nobody cares anymore. It was the second quarter. It's already passed. If you haven't woken up to the reality that China is in a severe slowdown, then you've got real problems.
Fraser, the question of connectedness. I look at a Bloomberg report. Morgan Stanley's Ruchir Sharma, an analyst, says, quote, the next global recession will be made by China. Connecting these dots is the 6.7% decline in Chinese imports. And this is pointed to in the 14% drop in Singaporean manufacturing. What this all suggests to me is that there may be a price to pay outside of China. Do you see it in Singapore? And can we look for any signs here in North America or in Europe?
Well, certainly. Well, you've already seen it in Singapore, and you've seen it in other countries in Asia, and a lot of the commodity producers as well. You simply don't have as many Chinese. So the wave of Chinese who would come in to buy the property market, for example, has certainly declined. You've seen that with falling property prices. In Australia, you've seen it with falling commodity prices, and many of these miners under severe pressure because the demand that they expected from China simply didn't come through. And so anyone who's producing stuff, and obviously anyone who's selling stuff to China is going to be affected. And so I think the U.S. is in a slightly different case, of course, because the U.S. is such a magnet for so many Chinese who just want to get out of China and they want a better life. It continues to attract Chinese investment and Chinese money. How much of that money is legal and whatever, that's a separate story. But you're already seeing this slowdown, and the fact that trade is slowing, that many partners are feeling this, China is certainly going to be causing ripples through the economy.
Fraser,
the global economy.
One of the things I thought was most interesting was that just before Beijing released its GDP number, the People's Bank of China, the central bank, said that China's foreign exchange reserves in the second quarter dropped by $40 billion. That is the fourth straight quarter of declines in the Forex reserves. That's got to be significant.
That's what I noticed the numbers myself, and I thought, hey, whatever happened to these forever rising foreign exchange numbers? Oh, you're at 4, and I think, oh, well, now we're actually getting down to near 3.5. And then you start to think, oh, well, hold on. One of these truths which we were led to believe about China, or one of these axioms about China, oh, it's not as strong as it once was. And you look around China, doesn't mean that it's all stopping tomorrow, but you look around and everything is starting to get weaker and not and you should be losing confidence across the board.
Fraser Howie is co-author of Red Capitalism, the Fragile Financial Foundation of China's Extraordinary Rise. Gordon Chang of Forbes.com. I'm John Batchelor.